All right, today we're tackling one of the biggest conflicts in the market right now, the big battle over Bitcoin. On one hand, you have cold hard data that seems to be screaming that this is a huge buying opportunity. And on the other hand, a tidal wave of fear, scary headlines, and just pure market panic. So which one is right? Well, our source for this, Cryptocurrently, makes their position absolutely clear. They're saying that despite all the chaos, the on-chain data is showing what they call clear signs of accumulation. The takeaway here is that smart money might not be panic selling at all. They might actually be quietly buying. And that's really the big question for all of us, isn't it? When the charts are telling you one thing, but the headlines and maybe your own gut are screaming something completely different, how do you even decide what to do? Do you trust the data, or do you give in to the drama? Okay, so let's dive right into the evidence. First up, we're going to look at the data, the signal that suggests Bitcoin is fundamentally undervalued at the moment. So to get this, we first have to talk about a key metric called NUPL. Now, don't let the name scare you. In simple terms, it just measures whether the average Bitcoin holder is currently sitting on a profit or a loss. It gives us this incredible, data-driven peek into the market's overall mood. And here is the kicker. NUPL is currently in the green cheap zone. Historically, this is a really big deal. Now, to be clear, it's not the absolute rock-bottom fire sale zone. That's the blue, very cheap area. But this green zone has, time and again, been a fantastic area to accumulate for the long haul. And you know, NUPL isn't just some lone voice in the wilderness. Other key on-chain indicators are flashing the same message. You've got the crypto quant cycle indicator, which also has Bitcoin in its cheap region. And then there's the realized price. Basically, the average price everyone bought their Bitcoin at. Well, we're trading just above that level right now. All the data points seem to be lining up. Now, let's pivot from all that on-chain data to the technical charts because guess what? They are singing the exact same song. We're looking at the 1-week Relative Strength Index, the RSI. It's a classic indicator, and right now it is screaming very oversold. That's a pretty clear sign that the recent selling has been extreme. And this chart really shows you just how powerful that signal can be. I mean, just look at this history. Every single time the weekly RSI has dropped this low, in 2014, 2018, 2020, and again in 2022, it has either been the absolute market bottom or incredibly close to it. If history is any guide, it suggests we're probably very late in this downturn. Okay, so the data looks pretty compelling. So why isn't everybody just buying hand over fist? Well, because we are up against a massive wall of market fear, what our source calls the noise. Let's dig into what has everyone so on edge. And we're not talking about minor jitters here. The list of worries is long. You've got these wild warnings from Google about quantum computers breaking everything by 2029. You have major geopolitical conflicts flaring up. And then there's the big one, recession fears, thanks to spiking oil prices. And on top of all of that, you have analysts calling for another 50+% crash, just like in 2022. It's a really potent cocktail of anxiety. And you know, it's not just feelings. Some of these fears have their own charts. Take oil prices, for example. Our source points out that historically, when oil gets more than 50% away from its long-term trend, a recession usually isn't far behind. And, yep, you can see we just crossed that very line. And this fear, well, it's not just talk. People are voting with their wallets. Just look at this. The biggest ETFs that track the stock market, the S&P 500 and the NASDAQ 100, have seen their largest outflows in a decade. This is big money, and it's running for the hills. So we have this clear signal from Bitcoin's internal data, and then we have this overwhelming noise of market fear. So what gives? Well, the analysis reconciles this by pointing to one absolutely crucial factor that makes this time completely different from the last big crash. And this is it. This is the whole ballgame. The analysis says that anyone comparing now to 2022 is missing the single biggest factor, the Federal Reserve. See, back in 2022, the Fed was aggressively hiking interest rates, sucking money out of the system. Today, it's the polar opposite. They're starting to ease up and even doing quantitative easing, basically printing money to stimulate the economy. That is a massive tailwind for assets, not the headwind we saw last time. And what's really remarkable, according to our source, is that even with all this talk of war, recession, and huge stock market outflows, Bitcoin has been incredibly resilient. And all the while, the big players, we're talking Morgan Stanley and the New York Stock Exchange, they're not backing down. They're actually getting more involved. All right, so we've got this messy picture, right? A strong signal, a whole lot of noise. So what do you actually do? Well, the strategy from our source is actually pretty straightforward. It really boils down to this simple two-part strategy. Step 1, start slowly building a position now while we're in this data-driven cheap zone. But, and this part is key, you don't go all in. Step 2 is to keep some cash, some dry powder, ready to go, just in case the panic gets worse and gives us an even better, very cheap opportunity down the line. And this is kind of what that looks like in practice, something like an 80-20 split. See, the 80% that's invested means you don't miss out if the data is right and things turn around. But that crucial 20% in cash, that's your safety net. That's your opportunity fund. It lets you sleep at night and gives you the firepower to capitalize if fear wins out in the short term. It's really a strategy that respects both the signal and the noise. So that brings us right back to where we started, with a fundamental choice. You've seen the data that points to a historic opportunity, and you've seen the very real fears that are driving the market. Ultimately, it all comes down to this. In a market of data and drama, which will you listen to? The signal or the noise?